RIN TV coverage of the 2015 Joint Industry Forum is brought to you by PCS, a unit of Verisk Analytics. Brad Kading was in New York to moderate the CEO panel during the recent Joint Industry Forum. We spoke with the president of the Association of Bermuda Insurers and Reinsurers about the impact of the tropical storms that hit the island last October, and Bermuda's effort to seek Solvency II equivalence, NAIC designation as a qualified jurisdiction, and more. Here are the highlights.
So Bermuda had two hurricanes within 1 week, and for Bermuda it's really an exercise in resilience. When you're a small island in the middle of the ocean, there's really no one else there to help you. So there's a great community spirit that helps in the cleanup. The building codes are quite strong. Houses have lasted for 200 years. The damage in the end is relatively small, and the estimate is if the damage had been to a U.S. city that the claims have been 3 or 4 times as great as they were in Bermuda. So on Solvency II equivalence, the EIOPA, the European regulatory body, has filed its report on Bermuda. It's now open for public consultation, which closes in mid-January. After that consultation period, the European Commission takes up the EIOPA recommendation. So Bermuda, broadly speaking, is well suited for meeting the equivalency tests. It's really now up to the Commission to decide whether to grant equivalence after it consults with the European Council and the European Parliament. So under the NAIC's Reinsurance Regulatory Modernization framework, if a jurisdiction is certified, that means reinsurers in that jurisdiction can do cross-border trade under an expedited approval process and with lower collateral requirements. So Bermuda is now one of 8 jurisdictions that have been approved by the NAIC as a certified jurisdiction. It's important for reputation reasons. It's important because it's a demonstration of regulatory cooperation between U.S. insurance departments at the state level and the Bermuda Monetary Authority. So the alternative capital that's come into the reinsurance markets, our membership believes this is a long-term change in the insurance industry's capital structure. What you see going on in reinsurance already has spilled over into the commercial insurance markets. And it's sort of a natural evolution. It's certainly quite disruptive to some specialty segments, but it's a natural evolution, and the goal then, the challenge that results from this is that we have to grow the demand for insurance. So we have to grow that demand in the United States, we have to grow that demand in developing markets so all this new capital can be put to work. But we believe it's here for the long haul. Well, the growth in the United States is coming from shifts of business out of state residual insurance markets. So Florida and Texas are good examples. In Florida, there's a potential for 50% of the risk of citizens to have been moved into the private sector over the last 2 years. Texas is experiencing some good depopulation efforts in its residual markets. Certainly, reinsurers want to take on risk from the National Flood Insurance Program. The Guy Carpenter estimates were maybe $9 to $12 billion in capacity might be available to take risk out of the U.S. flood insurance program. In the UK, there's a new flood insurance mechanism that will tap a couple $1 billion in reinsurance capacity. So in the developed world, those are examples. You move risk out of the government programs. In the developing world, it's a matter of increasing insurance penetration overall, getting the right products that people can afford, convincing the Chinese that commercial insurance is a proper thing for the skyscrapers in Shanghai and Beijing that often are not insured. So for 2015, there's a lot of regulatory risk. Obviously, we're working a lot to put this new capital to work, talking to policymakers on opportunities they have to move that risk into insurance markets. And obviously, we're still working in Europe on Solvency II equivalence. We're working in international capital standards. And the U.S., of course, we're still fighting against the proposed discriminatory reinsurance tax.
For more of our coverage of the 2015 Joint Industry Forum, visit the RIN TV On Demand Library.